There's a smart new website that will change the way you invest using social media.
LikeFolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of LikeFolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data. Analyzed by legendary traders. The LikeFolio broadcast starts right now.
We've got a lot of requests on what should I do with this position, what should I do with that position. So we're going to do a little position recap today, talk about some winners and losers that we've had, mostly winners actually.
Lots of wins.
Yeah, and talk about some open positions. A lot of people are following us, so we want to make sure that we get our wisdom out there.
That's right.
Let's go back to the beginning of the LikeFolio podcast. First one was Twitter. Nick, recap that one for us, because I didn't play and I don't want to talk about not playing it.
We just absolutely nailed Twitter. The data was bearish, but it was moderately bearish, and the stock had been beaten down so much that we just decided we couldn't really position bearish, even though the data was a bit bearish. I know you kind of wanted to do a short position, which would have worked into earnings, because we did this we did that podcast 2 days prior to the earnings event.
Right.
And what I did was I sold some puts, and I sold the February 2, which is expire on the second week of February. I sold the February 2 10 puts. So they were expiring the Friday of earnings week. So that was a pure earnings play.
I remember we each did 3 different things, and I didn't do anything because you guys kind of made me scared, but we all had 3 different ideas, and they all 3 would have worked. Even though mine was bearish, your guys were both bullish. It's pretty crazy that all would have worked.
So so I had a pure earnings play that was, that made $20 per contract. That was the February 2 10 puts. So sold the 10 puts for 20 cents per contract. They obviously expired worthless that Friday because Twitter did react in a bearish manner to earnings, but it got nowhere near the 10 strike. I think it went down to as low as 13, if I remember correctly. And then I did some covered calls into the earnings event as well, but it was a little bit more of a longer term strategy. And I bought shares at $14.50 a share, sold the $15.50 calls at $1, and I held that through earnings and beyond. And I did end up covering that, made about $200 per 100 lot there, or per lot, which is about 100 shares in one call. So that was a nice trade.
All right, let's move on. Hey, well, plus,
too much.
Little sting.
Let's just say we made a lot of money.
Nick's like, these are all the ways you didn't make money with us, Landon. Mm-hmm. Let's go quickly on the closed ones so that people who are listening who have open positions can make sure they follow along.
Sure.
Disney, you crushed that one as well. You did
that was a moderate win. That's
right. You sold at 180. You sold the strangle at 180, and you covered at 140.
Correct. So
that's pretty good.
Made $40 per strangle.
The next one we still have open. Of course, Nick's not in this one. Zynga. In fact, Andy's in this with me, but I'm in worse. I got in. I shorted at 182 and I doubled down at 213. So my average is around 199, I think. Stock's at 223. This is my loser on my books right now. Mm-hmm. I haven't booked it yet. I have a tendency to hold things when I'm losing and a tendency to hold things when I'm winning. I don't know what my problem is, but I'm not bailing on this one yet.
Unrealized loss means it's not realized.
I like that. I'm going to hold on. It's gone against me. I didn't put a ton into it, so I'm kind of okay with it. I don't like the red on my screen when I log in, but...
So you're in at $1.82, doubled down at $2.13, average price $1.98-ish, right?
Ish, yeah.
And now you're going to double down on your double down?
No, I'm not. I'm just going to sit here. You're baiting me.
Yeah, I'm trying to bait you in.
We're leaving Zynga alone. The data was terrible. It still looks terrible. So I'm just going to, leave it alone and see. We'll come back to it next time when it's $1.50, and then I'll get out.
Sounds good.
Probably keep holding. But anyway, let's go to Tesla.
Tesla, man. Big win.
That was nice. And this is the other one. I talk about how I don't like to exit my losers. This is my favorite thing about logging in, because I got in at this one long. I just bought. You guys did your fancy options trades and got out and got your money. I got in at 150 and I'm still sitting there at 207. So this one and Zynga are kind of in my mind right next to each other, and I put way more in Tesla, so I'm just kind of like, all right, I can handle that little Zynga loss while I sit on Tesla.
Yeah, I really like how you did that. You bought the shares at around 152, and you didn't put any calls against it because you really liked the data at the time. You really liked how much the price has been slashed. We had a really good conversation. Everything was bullish about our conversation, so you just said, look, I'm just going to buy these shares.
Right.
I'm going to see what happens. Whereas I took a little bit more of a defined risk approach.
Yeah, you're a little bit more conservative on all angles. You take more profits than I do, and you take smaller losses than I do.
I pretty much got max gain on my spread on that one.
That's awesome.
Yeah, covered at 5 cents.
So those people who are in this trade with me, they're just long Tesla. Do you think it's time to get out, sell calls against it? What would you recommend?
Andy asked me this question a couple weeks ago, and I think the stock was around 190 at the time. And I said, absolutely have to at least sell calls here. And my ultimate suggestion was sell half your position.
That's right. I remember that.
And then sell calls against the other half of the position. But I know you're stubborn.
I am stubborn.
And you haven't done it either of those things.
I'm stubborn winning and losing. It's weird.
You're just holding. And at this point, I think the same advice, strongly recommend exiting half your position and selling calls on the other half of your position. But if it were me, I would just take profits on everything.
Okay. All right.
So what do you think you're going to do?
I know what I'm going to do. I'm going to hold.
Keep holding.
Yeah. I might sell. I'm going to look at the call prices on Monday and see if anything looks too high. I'll keep asking you about the implied volatility. If it gets really high, I might sell some calls. Let's go to GoPro. We'll talk about real quick JWN. That one we didn't do a podcast on, but we did put out a trade on the blog where we had everything right except for the date. We needed more duration, so we missed that one.
Yeah, absolutely.
But we'll talk about GoPro.
That did teach us a valuable lesson that this data shouldn't necessarily be used on super short duration trades.
Right.
We were correct. It just didn't play out in the right amount of time. It played out a day after our expiration.
Yeah. I know.
So in the future, when we do earnings trades, we're going to have more duration.
Yep. And we've already done that.
Absolutely.
We've got some that are going out to June, even January. So yeah, we're getting that duration in there. GoPro. So let's talk about that one here. It's, I got in that one and I'm pretty much even right now. So,
yeah, you had an interesting take on that. You wanted to buy some shares.
You talked me into an interesting take.
I wasn't going to take credit, but okay. So yeah, you had a specific amount of capital you wanted to use in GoPro. You used half that capital to purchase shares outright, and then you used the other half of that capital to sell some puts. And since then, you have lost 30 cents on the share purchase side of the trade, but you made $30 cents per contract on the put you sold that you have now covered.
Pretty interesting that the same bullish mentality lost money when you buy shares, but it made money when you sold options. That that says a lot about the power of selling options.
It sure does.
Which I know why now you are always selling premium. Absolutely. So yeah, I'm even on GoPro, and I'm hoping that the stock comes up and both my positions make money instead of one making and the other one losing the same amount. That's where we're at on GoPro, but we're holding there.
I'm kind of mad at myself because Andy and I both mentioned in that podcast that we were going to buy in if we got a dip in GoPro, and neither of us did. I don't think he did. I'm pretty sure he didn't because we were laughing at ourselves for not doing it. I don't think I like it at 1260, but if it gets down to 12 or so.
Yeah, you need more of a dip than that.
Yeah, which I did get at one point, but I didn't act.
Ah, gotcha. Okay. Apple's our next one that we did. Let's see, what did we do on Apple here?
So Apple, I was actually out of town on that vacation, sitting on the beach while you and Andy were doing the Apple and a few other podcasts. This one was, you guys were bearish but cautious.
Yeah, and it was at 96 when we were looking at it, and it's up around 102 now. So I know we didn't do many shares. I don't know about Andy. I didn't do a lot of shares. We sold the April 97.5 100 call spread at $1 credit. It's $1.80 right now. So, we've still we're not max loss. We're still 70 cents away from max loss, but we're down on it. We've got some time left, but Again, we were bearish but cautious, so we didn't do a lot of shares or a lot of contracts. So
Two things that I will say about that spread right now. You have about 35 days left in the April options, so that's a lot of duration. Apple has not really participated that much in this broad-based rally.
That's the one thing that really makes me feel okay about this trade.
Yeah, and implied volatility is at like 3-4 year lows right now.
Right.
So that it indicates a potential pop in implied volatility, which of course would mean a dip in price.
Right. All right. So
this trade's still alive.
We're still alive on Apple. We'll see. We've got time left. We got a month left. Amazon's the next one, and this one I'm kind of happy about. I need a little advice. So Andy and I both got in this one. He sold the April 500 puts. Amazon was around 553, I think, when we did this trade. And we were both bullish. We were selling puts. He decided to sell the April 500s. Since then, Amazon's up $17. It's up around 570 now. He got out. He took his profits. I sold the July 500s for $27. They're now about $18 or $18.50.
Correct.
Is it time for me to get out, or should I hold? I will actually listen to you on this one. You say get out, and I'll get out. You tell me what to do, Nick.
I would personally continue holding for another $4 or so.
That makes me so happy.
Get out at around $14. I like about a 50% of the value to be, I want that option cut in half.
Okay.
In value.
Should I put in an order, a good till canceled order, or should I just wait till it happens?
I always put in good till cancel orders. Automate that profit taking.
Okay. What number? You tell me the number. I'll put it in.
14.
Put it in. All right. 14. I'm going to buy to cover my July 500 puts at 14. So if you're following us on that one, that's our official recommendation.
I think we should mention Andy had the amount of the win that Andy had there.
He did.
It was
really
strong.
Well.
At $9.50. He sold the April 2016 500 puts at $9.50. So he sold to open at $9.50, covered at $4. So that's a $5.50.
That's awesome.
Per contract gain, which multiply that by 100, it's a $550 profit per contract.
Yeah. And that's interesting because he did the Aprils and he made over 50% already. I did the Julys and I'm only making 30%.
The reason is the theta decay is totally different. You have to be if you optimize your entry on theta decay based on duration, there's points in the theta decay curve on these out of the money options where you get more of a dip, expedited theta decay at certain periods, and you're out really far, so you're just getting kind of linear.
Yeah, little here, little there.
Little by little.
When does it accelerate or when does it peak?
It starts to kind of accelerate right around 60 days left till expiration.
Okay.
So it accelerates from like 60 to 40 days, then it kind of flattens out again. Starts to accelerate again, or like 7 days left till expiration.
So getting out around 40 days may be optimal then, it sounds like?
Yeah, 30, 40 days.
Okay.
Somewhere in that range.
That way you take away all that risk of stock movement.
Exactly.
But you've maxed out pretty much.
Now, do keep in mind this only applies to far out of the money options. So if you're looking at it, if you're short an option that if it was initially out of the money,
right? Because
now it's in the money.
We're talking about something that's 10% away.
Yeah.
The 500s when the stock was at 550. So very cool.
It's still well out of the money. But if it had gone the other direction, that theta curve changes if it gets closer to the money.
All right, I'm putting in an order. Buy to cover at 14. Good till canceled.
Good man.
Sweet. It's a very rare move for me, but I like it. So the Target Walmart trade was next. That was a pair trade where we were bullish on Target and bearish on Walmart. And I put on a pretty strange one. I don't know if strange or not, but anyway, it was January and I did a bearish vertical on Walmart and a bullish vertical on Target. And they're both kind of about the same. They were both really close to, I think they were really close to already in the money. They both risked the same amount. They're both $2.70. And what's cool is, with Target, it was 75 at the time. We were bullish Target, bearish Walmart. Target has gone up $7 since then.
Significant move.
Up 10%. Walmart has gone up 1 point since then. So this is like totally nailing this pair trade. And so on the Walmart spread, on the vertical spread, I got in at 270. I'm down 17 cents on it.
Okay.
On the Target, got in at 270. I'm up 70 cents on it.
Nice.
So it's just perfect. I mean, it's just exactly what you would want to happen. So I'm really happy about that one. And the reason I wanted to get in January was I wanted to have another earnings report. So I'm going to hold this one for a while and hope for the possibility of max profit on both. So I'm going to get greedy on that one and just wait till after their next earnings report.
I like it.
Awesome.
That was an interesting podcast. So while I was on vacation, I was listening to these, and I enjoyed that one.
I hope we didn't make you cringe too much because you're the options expert. Andy and I know a lot, but you know way more. And while I was doing that trade, I was like, I wonder what Nick would say. Would he smack me for doing this trade? But so far, so good.
I don't mind it. I probably would have just straight up shorted Walmart and bought Target.
Yeah, it's so much capital though,
Absolutely.
But yeah, if I had,
but portfolio margin, they kind of offset each other.
That's true. Yeah. If that wasn't a concern, I think that would have been the definite play just to go long Target and short Walmart. But for those who are following along on that trade, great job so far. Let's just wait until, I want to wait till the next earnings report on both of them because they're both reporting around the same time.
Very cool.
McDonald's was the next one. And, we were very bullish. It was around 117 or 118 when we put out the podcast, but the stock was up a lot. And so we didn't do anything because it looked like maybe the stock had already moved. It's up. The stock itself is up $4 since then. But we didn't place a trade because, we're looking at divergences between the data and the stock price, and the data was up and the stock price was up. So it's kind of like, we may have missed the boat. Turns out we didn't. We could have gone long there, but that's all right. It's no big deal to do that. I think we got to stay disciplined.
It's understandable, but it's funny how just hearing the word McDonald's is triggering a craving for pancakes.
That's awesome.
All day.
All day breakfast. The next trade was Netflix, and let's see. Oh yeah, you got in this. You and Andy both. I didn't do anything. You and Andy did the strangle.
Yeah.
And you actually got out of it, didn't you?
I'm out.
Okay.
I'm out. Sold it for $275.
It was April 71.15.
Yeah, the April 2016 options. Sold the 70 puts. Sold the 115 calls, and for a total credit of $2.75 per strangle. Covered them at $1.75 per strangle.
Very nice.
Just earlier today. It's just basically churned and burned, baby. It's pure theta.
That's awesome. That's
Pure
a great
decay.
trade. And it hasn't moved. That when we did the podcast, Netflix was at 95. It's at 97 now.
It's just
So
totally
strangles.
tight sideways
Perfect.
range. So I didn't want to push my luck anymore. I'd held,
You
made
always get
$100.
out.
Made $100 per strangle.
Do you ever hold anything through expiration?
No way.
Jeez.
The risk reward is silly.
Yeah.
It's not capital efficient. I can put my capital elsewhere that it's much better.
Opportunity cost.
Yeah.
I like that.
Absolutely.
But isn't there just something so satisfying if you're short an option to watch it just expire worthless and there's no exiting trade?
I let that happen on earnings trades all the time. But if it's a duration based trade,
Because the move's already done.
I'm not going to sit there for 7 days when the thing's at 5 cents just so I can watch it expire worthless. Because I've had times where it's been at 5 cents, and then in that 7 day period, I end up with a losing position, and that is very unsatisfying.
That's a bad beat.
That's a bad beat.
Just because you wanted that 5 cents.
Can't handle it.
Okay. That's experience talking. Very nice. The next podcast we did was with Nicole, and that was Ralph Lauren versus Michael Kors. And, we didn't have a trade on that one. We were bearish on Ralph Lauren and bullish on Kors. And they're actually both up. So no trade on that one. I would encourage people to stay away. But if you're thinking about getting in, we're still bullish on Kors and bearish on Ralph Lauren. Sorry. Next one is Nike.
Yeah, man.
So, I did the, no, hold on just a minute. What did we do on Nike? Because I'm looking at something here. I think I might have bad information.
You did the 67.5 call spread. That was a 270.
No. See, that's right. Because I looked at my positions. No, I wanted to do that, but then you talked me out of it. I remember that because it was negative theta. That's right. We've got it written down here that I bought, but I was looking at my positions. It's not in there. And the reason is I wanted to do that trade, and it was like a 2-for-1 risk reward. I'm sorry, reward to risk. So I was going to risk 270 to make like 5 something, but then that negative theta kept eating at me, and you talked me out of it. So I appreciate that. So we had no trade on Nike.
I do recall being bullish in Adidas during that conversation.
Yes, but it was illiquid and we didn't do anything.
I didn't check Adidas' price though. I just recalled that.
Yep.
It's funny how the brain works, huh?
It is. It is. That's just didn't seem right because I was like, wait a minute, Nike's not in my positions. Coke is the next one. Oh, Nick, tell the story on this one because this was just a beaut. It's almost like the stock market gods listened to our podcast and
it was crazy.
It's beautiful. Tell people about what happened with Coke.
So Coke had been pretty sideways for the past several months and had pushed up against 44 resistance on several occasions. It was pushing up into 44 resistance one more time when we did the podcast. And the more a stock pushes into resistance, the higher the probability that the stock's going to break that resistance is kind of the
and it had
common
been
consensus.
Pushing forever.
It had pushed it was like the 7th test of resistance at 44.
And then the
LikeFolio
podcast
data
was like the 8th thing that just broke straw that broke the camel's back.
The LikeFolio data was bullish, and it was pushing really strong through that 44 resistance.
The data had been uptrending forever, and the stock had been uptrending until the resistance. So there was that divergence that we always talk about and that we like.
Yeah, implied volatility was really low, so I did something I rarely do, which is buy a call. And about the 45 August calls for $1. I think they're currently $1.70.
Yeah, 65 or 70. Yep.
So we did, in fact, get that resistance break the next day.
Fantastic.
And it's rallied up to like 45 and a half.
Yeah. So Coke it was 44 forever. And then we put that trade on and it went to 45, broke 44 and up to 45, 45 and a half.
Yeah.
So that was awesome.
You put some of those on too, didn't you?
I did. I love it. Yeah. I've got, it's like a 60, 70% gain on that trade.
I intend to keep holding. I think we'd
really?
Yeah. We'd mentioned,
I thought you told me we were going to sell.
No, we mentioned it was going to go to about 50. We could see a potential run to 50. It could retrace back to that resistance, turn support.
Are we going to put in an order?
There.
Good till cancels, like $4 or $5? What?
$4.
All right, we'll do it.
I like that. Good call.
I need to do these good till cancels because otherwise I'm going to have a lot of Zyngas and Teslas in my account.
That's true, man. I'm going to start pushing you towards that.
It's only, you know what it is? It's with shares that I feel very comfortable holding. With options, I'm more apt to get out. And I'm okay with that. But with shares, like when I'm short Zynga or long Tesla, I just like to hold. I don't know why.
Unlimited duration.
That's what it is. It's unlimited duration. All right. Nick's cracked me. He's figured out my mind. All right. I got to fix that. The last two trades that we've done since then were Starbucks we did that podcast with Todd Earwood. That was really cool because he had a lot of interesting takes on the business. Just not only from a coffee guy, but also as an entrepreneur who just did that tech conference. So if you haven't listened to that Starbucks podcast with Todd Earwood, check that out because that's pretty neat. The automation and all that's coming in the next few years. And then Urban Outfitters, which I'm still shaking my head at some of the stuff that they do.
It's crazy.
We did 2 trades on those, and neither one of them have really moved since then. I mean, we were talking about yesterday and the day before, I think. Mm-hmm. So both of those are basically just where they're at. So if you like, if you're looking for more positions, the Starbucks trade was we bought a bearish put spread, the May 57.5 and 60. We bought that for $1.30. It's currently $1.36, so we're up slightly on that one, but it's definitely still something you can get in. Urban Outfitters, we sold we did a bear call by selling the 33.35 Junes for 85 cents. The stock is up a little bit since then, so you can actually beat our price and get in at 88 cents. But both of those are basically still right where we got in, so there's nothing much to say on those.
Yeah, I actually passed on Urban Outfitters.
Oh, you didn't do that one?
No, I passed on it because I wanted to respect that earnings move because we had a really big, like 15, 20% move, something like that. And I wanted to see it test that 35 level. So if it extends to the upside, test 35, installs, that's when I'm going to position bearish.
You'll be able to get in a lot better at that price.
Assuming it does continue to extend higher, because right now it's barely moved. It's up just a touch.
It is up just a touch. I hope that you're not able to get in there.
Yeah.
I might just put in my order to get out at 45 cents. Since I got in at 85, would that be a good price for you?
Look at you.
I'm trying
You're growing.
I'm trying. When I'm around you, your wisdom just kind of, seeps into me, into my unconscious. And
I like the 45.
All right. Good till cancel 45 on that one. Awesome. Very cool. I'm going to wait and see on Starbucks. So is that what you're doing?
Yes.
Okay. Just wait and see on Starbucks.
I really wish the 65 calls would have had more premium, but they just didn't have enough because that's what I wanted to do. I wanted to sell those 65 calls naked. This didn't have quite enough in them. So this position put us a little closer to the money, but all in all, I'm fine with it.
Yeah. And when you look back at what we've done, we've always known, like for the last 6 months, I've been doing a lot of research and analysis, and we know this data is awesome.
It sure is.
But now that we're doing these podcasts and actually putting trades out and people are following us, it's like, it's just confirmation. And with confirmation, when you're putting money in your account, it's just so fun.
Yeah, and we've known when not to trade. And I think we're getting better and better with how to utilize this data.
I agree. I think we learned a lot from Nordstrom. I can't get that one out of my head.
Sure.
The duration is really important. And that's just one example. There's probably 5 others, but that's the one that jumps out at me.
In all fairness, and Nordstrom, we had talked behind doors about if there was a dip on the earnings, we should buy shares and sell calls against it, or just buy shares, and that would have worked. But we didn't mention that out loud to the public, so can't really chalk that one up.
No. But we had the direction. We've had a lot of these directions right, and we're not all just bullish. The market's been up, but we are going both ways and killing it. So
I mean, there really is a whole lot of win here. The only
my favorite's the Target, Walmart. That's Tesla. Cool. I love logging in and seeing it, and I feel sorry for people who only did options and got out like you. But my favorite is the pair trade of Target and Walmart because they're both it's just perfect.
Yeah, it's working out great. But a huge win in Twitter, huge win in Tesla.
Just had to say Twitter, didn't you?
Huge win in huge win in Amazon. Yeah, I mean, there's been a lot of really, really good trades. Netflix was a great trade. Coke so far is looking pretty awesome. It's defying my I never buy puts or calls outright.
I know, right? Well, when the premium was just so low.
It was.
It's amazing.
Made sense.
So next week, we're going to bring some more winners your way. So stay tuned. And until then, everyone have a fantastic weekend.
Take care.